It's quiet out there, almost too quiet. Yes, it's all a bit low-key out there in the markets today, and the most likely reason is that investors are sitting tight and waiting for some numbers. Numbers that could set markets pumping or set them a-dumping. So, the fun kicks off tomorrow with the release of the revised Q2 GDP figures in the good old US of A. Recall, if you will, that when the initial figures came out a few weeks ago, they showed a second consecutive quarter of negative growth for the US economy, meaning, that's right, a technical recession. Not that the government would dream of declaring an actual recession, of course, not with those midterms coming up. Now, the revised numbers published tomorrow are obviously arrived at using more available data. So, if they show that maybe, just maybe, things aren't as bad as the last lot suggested, then markets could well react positively. But the big day is Friday, and not just because investors have a big night out planned. Well, perhaps they do, I don't know. Friday sees the release of the Personal Consumption Expenditures, or PCE, figures for July. So, without getting too technical, the PCE is the Federal Reserve's preferred measure of inflation because the CPI is so, lame. And if it's high, then we could see ourselves a bit of pain. This is because a high PCE reading, i.e. above June's 6.8%, will convince the folks at the Fed that they need to fight inflation more aggressively. And that means, higher interest rate raises from next month. Now, of course, we're almost certain to see a rise in September, so the only question is, by how much? A high PCE will almost certainly point towards a 75 basis point hike, and the markets are unlikely to enjoy that. Then, as if Friday wasn't exciting enough, we'll also be treated to a glimpse inside the Fed's brain on that day when Chair Jay Powell speaks from the Jackson Hole Symposium, where he and all his central banker buddies have got together for a few days, fishing, golf, and high-level economic chin-wagging. Not too sure about the first two, but hey, it all sounds great. So, in all seriousness though, Jay Powell's speech from the shindig will give important clues as to what we can expect from the Fed in the next few months. So, keep your ears peeled. But as the markets hold their breath, waiting for all of the above, one stock and one crypto project are each having themselves a very green day. So, for starters, Tesla, the car company that Elon Musk runs when he's not running all of his other companies, is seeing its stock pump because of a stock split. For those unfamiliar, this is when a company issues more shares at a lower price, but rewards current shareholders with additional shares to avoid devaluing their overall position. With shares now supposedly cheaper, the stock often pumps as more investors are lured in by the lower price. Tesla has split its stock 3 ways, meaning current holders get 2 extra shares for every one they currently hold. Nice. Meanwhile, in crypto, Evmos is leading the pack on an otherwise pretty lackluster day in the market. It's up around 19% today, as I record this, on the news of an impending network upgrade that will see a new transaction fee model inspired by EIP 1559, which will see half of all transaction fees being paid to dApp developers building on Evmos, with the remainder going to validators securing the Evmos chain. For those unfamiliar, Evmos is the first EVM-compatible chain built on Cosmos, meaning popular dApps on Ethereum can easily be deployed on its blockchain. Evmos's fee structure seems to be a first for EVM chains, and this could attract lots of developers into the Evmos project and the Cosmos ecosystem by extension. Just note, I hold Atom and ETH in my portfolio, and you can find out what other cryptos I hold by subscribing to my weekly newsletter. Anyway, that's today's update, folks, but I am contractually obliged to remind you to like and subscribe if you enjoyed this and if you want to see more. So, thank you for watching, and please do come back soon.